Hi, fam. So today, what if I told you I can show you a true tool to look at to see when the market is going to sell off, how the market is selling off, and how you can just adjust during the game, right? So today I'm going to talk to you about a tool that I always use that can tell me like what's about to happen so I can keep positioning myself. What happens is most people just get blindsided when the market is selling off, right? And you kind of don't know what happens. You ever thought about it like, yo, the market is doing good, everybody's good, and then boom, like out of nowhere, the market sells off. You like, yo, where did this come from? Right? So today we're going to talk about the VIX. Now, I've made a video before talking about the rule of 16, which is really good. Go search for that on how to get options prices, on how to get your strike prices, how to know what the market is doing. That's a really cool video. If you haven't found it, go look at that one. But today I'm going to break the VIX down in 3 levels, right? And I'm going to give you some homework to go do, right? If you go look at this and see, you'll be like, oh, I see it now. So before we get into it, man, I want you to like, subscribe. I want you to take a minute, go get your pen and your pad, because this one here is truly going to take your investment journey to another level. Because if you can start seeing what's going on and like, oh, okay, bet. Trap told me this, right? So I want you to like, subscribe, get your pen and your pad, get ready, because today we're going to talk about the VIX. All right, so when we think about the VIX, it's the volatility index. So essentially, if the VIX is going up, we know that the market is going down. If the VIX is going down, we know that the market is going up, essentially, right? So the way to find that is simply you can go to Yahoo Finance and put in VIX. Boom, it'll pop up. You can get into your search bar and be like CBOE, Chicago Board of Exchange, VIX. It'll pop up. If you see the VIX going up, it'll be in green. You know that the market is probably coming down. If you see the VIX down, then you know that the market is probably, you feel me? It works opposite, right? If the VIX is up, that means there's volatility in the market. Mean there's some sellers in, there's some panicking in. We're in a bull market, we're in a bear market, a recession is on the way. The VIX tells us that. If the VIX is down, you know there's a lot of sellers in. That means people are panicking. You feel me? If the VIX is down, that means the market is probably going up. So it means people are not panicking, people getting some money, people chilling, right? So what I want to do for you today is I want to walk you through 3 stages in which I know when I'm looking at them, like, okay, here's where we at. And this is what I should be doing, right? So normally the range for the VIX, and I'll put it right here, VIX, normally that range is between 14 and 17, right? So we'll call this calm. So if the VIX is in between 14 and 17, that means people are making money, right? So the market is just doing this every day. It's not saying the market is just skyrocketing, but we know the market is going good. Now, if it's somewhere between here, like 15, 14, you probably seeing a lot of green in the market, right? Because that means the sentiment is whatever the news is going on in the market, earnings may be really good in the market, somebody is saying something to calm the market. If it's between 14 and 17, that's the normal range, but 15, 14, 13, you know the market is just in a sweet place. Now, 16 and 17, the market ain't too excited. You may have a sell, you could have a sell-off here and there, but nothing real crazy. 15, 14, that's pickings. Like 13, 12, somebody at the bank. You feel what I'm saying? Now, what I want you to understand is this. It is in this area in a calm where most people get sloppy. Because in this area, everybody trying to chase the run-up. Everybody, because the market been smooth sailing. So when you get here, when the market is here, 15, 14, 13, right here, people sloppy. That's what people doing. They're just throwing money in the market. They're just throwing money in the market because everything running right here, right? In this phase, the market is doing really, really good. Now, what I want you to go do is, I want you to go look and see. I'm gonna give you some homework to go do. I want you to go look at the VIX and I want you to just slide it. When you're looking on Yahoo Finance, I want you to use your mouse and just slide it and see. And when you're looking at where it's at, I want you to match that date. And I want you to go to the S&P 500, SPY, VOO, Q, Q, Q. And I want you to look at what when you look at the VIX and you see it doing like this, on the up days, I want you to match that date with a date on a SPY, the VO, or the QQQ. When the VIX is down, when it's at these, I want you to match it with a date. And you can see exactly how the market is doing. Meaning, you go to this and you say VIX, and let's say it's at 19. Get this date and go say, okay, let me match what the date was, what the market was doing on these days. And you'll see exactly what I'm talking about. Right? So it's in these times where people get sloppy, people get caught off guard, and actually, listen, people are being really, really, really greedy. Now, what I want you to do in these dates is I want you to enjoy that, right? As an investor, you're supposed to enjoy those moments. But what I want you to do is, like I did something the other day. The VIX was at like 13. I also knew it was February. It's important for understand how the market typically responds in these months. I said, okay, it's February. The VIX is at like 13. You know what? Let me take some money out. So I was in 32 options. I was in 29 options plays. I took 95% of my cash from all those plays. Put it on the sideline. We went on the sideline. I told my community, I said, hey, y'all, the perfect time to take profit, especially in the options market, is when the market is running green. So took like 1.3 million, put it on the side. I'm like, all right, bet. The market ran for a couple of days. Boom, we started to get hit in the face. Walmart put some not bad earnings, but some lower guidance out. And then the sentiment for the consumer came out the next day. Guess what? VIX went from 15, 16 to 17, then 18. So immediately, watch this, from 18 to 22, sellers have entered the chat. So anytime that VIX is between 18 to 22, you know that sellers have entered the chat. And you got to monitor it at this point, right? You want to be on board. Now, watch this. You don't necessarily have to get out the market. I don't want you to do that because this represents what? This represents opportunity for us. This is why we know how to take advantage. Okay, the VIX is at 14, 13. Okay, cool. I don't want to get too caught up in this. The goal is the market will lure you to sleep. Like, you are so excited, you get so intoxicated off the wins, you get so intoxicated off the victories, you get so intoxicated off your positions running, you forget, oh, the market is just waiting to go down. The market has to sell off. So listen, the market is up 76% of the time. Those other percentages are, well, we got to lock in and say, all right, that's why me personally, I don't get too high on the highs and I never get low on the lows. I'd be like, all right, bet I made some bread. Let me take some bread, put it on the side so I can do what? So I can go knock off, right? So I can go buy this NVIDIA, this Tesla, this Palantir, this whatever. I need to buy off. Like on the down day when the market went down, I bought my daughter 100 shares of Palantir. No, I'm lying. I bought her 200 shares of Palantir and like 200 shares of CrowdStrike, right? The market had been on a dip. I got another 5 option plays, right? Because there's only one man in history ever predicted the bottom. That's the man that said, okay, this is the end of 2009, and he predicted that bottom. 2009, he said, this is it. It's over. And the next day, I said, oh, he knew something. Go research that. There's only one man in history that predicted the bottom. So what we supposed to do is say, okay, I don't know how far the bottom is, but I'm looking at the VIX, and I'm saying, I'm never going all in. I'm gradually getting in positions. Right, so anytime you see this 18 to 22 kind of VIX, you know, okay, you're going to see red on the TV. You're going to see them saying the sky's falling. You're going to say the bottom, you're going to hear it. Don't let it push you out. Now, the next range is this, 23 to 30. This is an intense sell. This is intense sellers. These are people that's running for it. They at this point, watch this. They in panic, right? If the market hits 23 to 30, they are in panic. And so you need to be saying, okay, whatever plays I'm in right now, I do not have to exit them. But if I'm in some plays that are really up still, let me just skim some old cash off, not your buy and hold plays, because it's going to be time to reposition. Now, here's what I will tell you. During the pandemic, the VIX got to like 70, if I'm not mistaken. But I do know in 2023, we got a VIX of 65. I remember being a play, I was in a play AVGO, I was in an option play. That play went from that play went from $900 to $750. I had to get out of the play once the play got to like, I think it was like 30. I took the L on it. It got down to 797. I got back in. The VIX was at 62. I never forget that. That play from 62, that play from 797 soared all the way back to 1900. And I was in that AVGO play that long. We got a 700% rate of return on that, right? So anytime it goes to from 23 and up, you know the market has now entered a different level of fear. It is now went into agony. It is now went to this. And in that, I'm going to tell you something. In this level right here, this is going to push everybody out who was being greedy. This 23 to 30 range is going to push all greed out the market. The only people that's going to be in the market right here is people that just see the future. Now, the thing about this is when you in this range, you gradually scaling in. When you in this range, the market is going to put pressure on you. I don't care who you is, right? The market is going to put pressure on you. I remember looking at the movie, it wasn't The Big Short. I think it is The Big Short when the guy says that the recession is about to happen in 2008. He sat in that for 16 months. Maybe about six to 16 months, he sat in that position he was in a short the market play for about 16 months. So much pressure because the market was running up. But when the market turned, oh man, he was the only one that made money. So you got to be willing to say, for me, I'm the reverse. Like if I see the market going down, I'm like, okay, let me average in some of my positions, right? And I'll take the pressure I remember last year, I sat in that pressure from July to August, about 6 weeks. I sat in that pressure. I'm talking about the market. If you remember, go look at where the VIX at was July last year, 2024, all the way to August 2024. Pressure. You hear me? I was in Italy like, oh my God, okay, bet. Let me get some stuff in place, right? We came out of that. We had a run. September, October, November, presidential election, December, we had a nice run, right? And I want you to just understand that if you can understand these three levels, 14 to 17, that's calm. This is when people get sloppy. 18 to 22, it's a little pressure. It's sellers, but it's more so, I call this profit taking, right? There's a difference between profit taking and sell-offs, right? Profit taking is when the market has ran up for a little bit. Somebody says something on the news, some type of news came out. People like, you know what? The market been running up so much. Let me take some profits, right? That's okay. You don't got to panic too much, but you can position here. You're never supposed to panic. But when you hit 23, we out of profit, and now they just selling. It's the difference. Profit taking is saying, yep, I done ran up so much, I'm going to take some profit, put it in my pocket. Sellers is like, yo, I'm getting out of here because the sky is falling, right? So I want you to go back. I want you to look at the VIX, see that, navigate this. If you can navigate this, if this can help you, now this is going to show you, this is going to keep the market from catching you off guard, right? And you see the VIX slowly moving, you say, okay, this is the time for me to move around and do some things a little bit different, position myself, man. So I hope you understand this, man. I hope that helped y'all big time with this, man. Well, understanding the VIX, this is like the pulse of the market right here. The VIX, CVOE, this is the pulse of the market. If you can understand the VIX, it'll help you out so much with understanding what phase the market in. Are we in a calm phase? Are we in a take profit phase? Or are we in a seller's intent, seller's panic phase? Man, it's your boy, the Wall Street Trapper, man. Make sure you like, subscribe, and share this video. Also, remember, that's not me in the chat telling you about Bitcoin, telling you to get with my mentor. That's not me. Check out our show each and every Tuesday on the Wall Street Looks Like Us Now network, man. I love y'all. I appreciate y'all. I'll see y'all in the next video.